Ever since the year 2018, Tesla stocks has been in a downward trend. The company's stock price fell by over 20% during the course of the year, and press reports regarding Tesla's production problems and delays also added to the downturn. However, what if there was a secret explanation for this? What if another event was occurring in the background? I'm going to make a surprising Tesla discovery in this video that you might not have known about. Hey guys, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Make sure you click the subscribe button and enable the notification bell if you haven't already. Share, like, and comment. This year has been a wild ride for Tesla shares. It went down, then up, and then back down. Despite all the high ends and lows, Tesla's dedication to innovation and forward thinking has remained constant. Some Tesla investors were concerned that billionaire Elon Musk was giving up on the market of electric vehicles to concentrate on the social media firm when he purchased Twitter. Thus, on Twitter, what else might go wrong? Musk responded. Tesla shares have dropped since the agreements were finalized in late October, with the year concluding with a 65% loss. The worst year ever for the company, yet Twitter is only a small part of the cause of the sell-off. Here are the factors that discouraged Tesla investors in 2022 and how they may impact the automaker in 2023. Starting with demands, Tesla has been a market leader in electric vehicles for several decades, but while its dominance was maintained in the third quarter of 2022, its market share fell to 61%. The question entails whether or not demand for Tesla cars will remain as great as it has been in the past. According to Sean McLean, the WSJ reporter, in the past year, we have witnessed an explosion of competitive EV models for Tesla. JD Power reports that by the end of 2022, there will be 53 EV models available in the US, up to 33 at the end of 2021. According to S&P Global Mobility, 4 of the top 5 selling EVs were still owned by Tesla. The sell-off in Tesla shares, however, underscores investors' concern that the company's hold would slip when fresh models were released. The question is whether Tesla will remain as aggressive as it has in the past, or if its model will become dated. According to McLean, who noted that Tesla has been selling the same few models for years. Another source of concern is Tesla car customers' lead times, which have also sharply decreased since 2022. Some investors interpret this as a symbol that demand is beginning to decline. Musk discussed these issues on Tesla's third quarter earnings call. I can't emphasize this enough. We anticipate selling every vehicle we produce for as long as we can see because of the excellent demand we have for Q4, he said. On a Twitter Spaces call in December, the CEO said that increased interest rates policies were to blame for demand difficulties. Production difficulties were another factor in the stock decline from the previous year, which caused Tesla to fall short of its full-year vehicle delivery goal. In 2022, 1.3 million EVs were supplied, an increase of 40% from 2021, according to EV manufacturers. That fell short on its target of a 50% or greater increase in delivery. To reach the goal, it would have required more than 1.4 million. Stocks fell another 12% when the shortfall was announced to start the new year, the biggest drop in a single day in more than 2 years. One aspect of the issue was Tesla's China factories' infrequent closures, which were its largest in terms of volume. Thus, according to WJS reporter, China's zero-COVID policy caused a lot of manufacturing closures in Shanghai, which inevitably led to new supply problems. Nevertheless, Tesla also encountered difficulties ramping up production at its new operations in Texas and Germany. Several issues were addressed by Musk in a May interview. According to Musk, both Berlin and Austin factories are big money furnaces right now. As a result, these production bottlenecks were caused by increased supplier and shipping expenses as well as rising inflation. According to McLean, costs for everything from the materials used in the production of batteries to labor costs to construction-related expenditures are rising quickly for Tesla and other maker of EVs. Even though the car sector doesn't typically have high profit margins, all of that is increasing. This would include spending approximately $11 billion on car-related expenses in the first quarter for Tesla. How they would maintain the factory enough that they could continue to pay their employees and avoid bankruptcy is Elon Musk's main concern. Some analysts and investors believe overvaluation is exacerbating Tesla's declining stock price. Senior research analyst Craig Irwin claimed that Tesla has been grievously overvalued for the previous 2 years simply on hype. However, at its height, Tesla had fewer sales than a tenth of the world's major manufacturers combined, but was still valued higher than them all. Many investors who have argued about whether Tesla is an expensive firm have done so on the grounds that it controls a sizable portion of the US EV market and was the sector's pioneer. Some investors claim that Elon Musk's claims regarding future automobiles have propelled shares higher despite the fact that many cars didn't appear until years later. This company's valuation was influenced in part by its CEO. The most recent illustrations in Tesla's Cybertruck, which was introduced 3 years ago, but has still not entered the market. Additionally, Tesla's share price has fallen as a result of Musk's decision to sell billions of dollars worth of stock, which was partly motivated by Twitter. The WJS reporter mentioned, "Whenever or wherever anyone out there continues to sell $40 billion worth of company stock, it is indeed going to bring that stock price down." The impact of what particular behavior on other investors is unclear. Tesla did not release a statement. As investors throughout the industry get ready for what some believe to be an impending economic downturn, Tesla's stock is falling. A recession might make it harder to buy cars, particularly more expensive ones. Will they instead buy a gas-powered car for $40,000? Would all those folks who could normally afford one in 2022 or 2021 buy a $60,000 car? Musk stated during the Q3 earnings report for Tesla that the EV company is recession-resistant. "Let's assume 2023 is a terrible recession year," Musk said. Tesla shareholders are already anticipating later this month when the auto manufacturer will announce its full-year earnings, which could offer a peek at the stock's opportunities for the coming year. Then again, we create constructive money. We hope you enjoyed our video today. We'd love to hear what you thought of it. Let us know in the comments below.